Know the difference with Annex Wealth Management? We need to talk about volatility. Joined by Dr. Brian Jacobson, Chief Economist at Annex Wealth Management. Hey, Brian.
Hey, it's good to be here.
And Matt Morsey, Director of Research and part of the in-house investment team at Annex. Hey, Matt.
Hey, Danny.
Emotion and investing. It's not like peanut butter and jelly. Might not be great partners, especially when the market is volatile. We like when things go up. Some might be fine stomaching a 20% pullback, and others have trouble with a 6% dip. And we understand that.
Oh, absolutely. You know, different clients have different goals and appetite for taking on risk. And that's why we put planning first. It's about knowing what are your goals, what are the different constraints that you face, but then also not ignoring the emotions. People have a different capacity to tolerate risk and also a different attitude towards risk. And those are all things that filter into how it is that we build portfolios.
Yeah, I think one of the important things that we talk a lot about as a team is understanding where we are within the markets, especially when things start to pull back and that uneasiness starts to feel, especially when you get used to, some really great returns that we've had, understanding where we are today and maybe some of the things that have happened in the past as well, too, to put some perspective around where we're at.
Yeah, we've looked at about, I would say 42 of the pullbacks that we've seen in the S&P 500 going back to the last 75 years. Okay, so there have been about 42 episodes where we've seen a peak to trough decline of 10% or more, or even 20%. And that's kind of an arbitrary line that's drawn in the profession to differentiate between a correction and a bear market. A correction is like 10% or worse, and then a bear market is 20% or worse.
But you can understand the kind of scar tissue regular folks have.
Oh, absolutely. And there's also that whole difference between how you think you might feel during a pullback and how you actually do feel during that type of pullback. That's one of the things that I always hear from people is, I'm going to buy on the dip. But then when the dip happens, then they're too scared to do it.
Yeah, I mean, we've always talked a lot about, when you go into a store and something's on sale, everybody starts buying more. The stock market's kind of the opposite, right? When things start to go on sale, people start buying less and even trying to get out and start selling the things that are now down. And that clearly, from a long-term perspective is the wrong thing to do. But those are the emotional things that clients deal with, that, we deal with ourselves too, when we're thinking about our own portfolios and what's going on in the markets. And you start to see that and you start to extrapolate a lot of those things.
But the regular person, the regular investor sometimes thinks this dip is going to get deeper and longer, and I think that's our fear.
Well, yeah, and I think that's really the problem is that the future is unknown, where if you are going to the store, you know the product that you're buying, but you don't know is the price going to get lower, and so at a certain point you're like, oh, it's fine, I still want it. But with stocks, it's a little bit different because it's cheap now. It could continue to get cheaper, but that's where I think that it's really helpful to maybe review a few of the historical episodes to be like, what are some of the lessons that we can learn about how to navigate through those types of environments?
One of the biggest ones that we've seen, over the last 20 years or so ago was the financial crisis. And I know, Brian, you've dug into that quite a bit. Do you just want to kind of remind everybody a little bit about what was happening and kind of what went through the markets at that point?
Yes. So the global financial crisis, I was working for a very large asset manager at the time. And it was incredible the number of not just individuals, but institutional investors who were panicking during that period. And I think it made a lot of sense because we hadn't seen a financial crisis since really the Great Depression. I think that's part of it too, is that we hadn't seen something like this in a long time. But that's also a key thing to remember is it was indeed a financial crisis where it was about the health of the banking system, and that just amplified the problems. But when we look from peak to trough, the market peaked around October 2007, and then it bottomed around March 2009. That was a very long bear market where the S&P 500 dropped more than like 57%. But during that time, because there was that type of panic, there was what we call the flight to safety, where people were buying up treasuries and fixed income securities. That is what you would expect to see if the fear was about growth risks. And I think that's really a thing that when I look at market moves, what's driving it? Is it a fear about growth? Is it a fear about inflation? Or is it a fear about geopolitics? Because if it's fears of growth or geopolitics, that's typically kind of bad for stocks, but pretty good for bonds. If it's fears about inflation, that can be a very different story.
Yeah, I think when you think about fears, the one that kind of strikes me in mind is kind of the next thing that we dealt with after that. And there's a little bit of a gap, but COVID. COVID was all driven by fear.
Yeah.
And you could really see that when you look back at it too, because you had a long pullback with the financial crisis that was very stressful. But the fear that really drove COVID is that you basically just had a 1 month time period where everybody freaked out all at once and everything went down.
Yep.
And there's a fear of not even knowing what was going to happen the next day. And, the reports on CNBC are not just about the markets, but about hospital capacity and all the things that were going on there. Again, you had basically the shortest bear market that we've ever had, but still really, really deep, that we went down over 30% in stocks. And there's dislocation in the bond market to the extent that the Fed said, hey, I think we got to step in here and we might even buy high yield bonds.
Sure.
And that was kind of that turning point where I was like, oh, well, last time it took forever for the federal government, the Fed, to step in. Now they're doing it right away. Maybe we don't have that same fear level that we had, and we've already had such a big pullback that now it's time to start moving forward.
In our final 30 seconds, what's the view from our investment committee?
Well, I think that the biggest view is that don't panic because everybody else is panicking. That is really a formula for derailing from your financial plan. Stick to the plan, stay informed, but don't get wrapped up in the emotions. Consult with a professional to maybe guide you through that. It's just like if you have a health scare. The best thing to do is talk to a doctor. They can provide you some valuable perspective.
Brian Jacobson, Chief Economist, Annex Wealth Management. Thank you.
Thank you.
Matt Morsey is our Director of Research. Thank you.
Thank you.